Welcome to Dividend Portfolio Review. This is Eric. Today is Tuesday, May 30th, 2023. If you're new to the channel, this is Dividend Portfolio Review. Dividend Portfolio Review is the channel where I go over my personal dividend portfolio, which is currently broken down into two separate accounts, one being a Roth IRA, which contains the remnants of my very first grown-up adult job's 401k, and the other half of this portfolio, or the other portion of this portfolio rather, is a taxable brokerage account. That I place $375 at minimum bi-weekly into that account, sometimes more, sometimes less. At the start of the day, pre-market, both accounts were currently valued at $46,614 and change. Let's get right into it. It's currently down, up a little bit, actually now at $669 and change. This is the ebb and flows of the markets. It's nothing to write home about, nothing to worry about. This is part of a healthy market. Let's get right on over to the brokerage account. See what I bought last week. Look at that. Bingo! I purchased Broadcom. Did you buy Broadcom last week? If you did you get it in lower than me? I know I missed out a little bit. I didn't miss out all the way, but I missed out a little bit. So last week, or even at the start of May, I had all intentions of purchasing most likely Raytheon or Northrop. I wanted to get a defense contractor in, and I was going back and forth all month in my head as to which one I would get, because I didn't want to get both. And so I kept going back and forth in my mind, and then I do work nights, so I sleep during the day, and the other day I woke up and I read this news. Apple announces multi-billion-dollar deal with Broadcom for US-made chips. And this whole article right here, and it not just this one, there was other news articles about it. It struck a chord in my head. It reminded me of the Apple unveiling the very first iPod. Do you remember that? Do you remember that day? I'll tell you what I remember about that day. It's sounding like incredible news. And I also remember saying I would like to invest in Apple. And I looked, and Apple went from $20 a share to $22 a share. And I said to myself, well, I missed my chance on buying Apple and making a lot of money. It already jumped up 10%. And what did I do? I did not buy Apple. I did not buy Apple that day, or any of the days after, or the weeks or months or years after. Instead, what did I do very shortly after that original iPod announcement? I put more money into Palm. Do you remember Palm Pilot? If you're old enough to remember, you remember it's a sad story. Palm does not exist anymore as a company, or if it does, it's not what it once was. And the Palm originally was basically a little computer that could fit in your pocket and be used on your fingertips. And hey, who makes that now? Apple does. They have the iPhone. So I picked the wrong choice back in the day. Let's go to Apple. Let's talk Apple back in the day. So I remember in the late 90s working in a data center, and people brought up Apple. They just remembered Apple. They were like, whatever happened to Apple? And it was a junky company in the late 90s. We're talking 98 into early 99. It was a junky company. It was not really 33 cents. There's been a lot of stock splits since the late 90s up until today. There was a lot of ups and downs here, and it was in the late 90s that there was a big down period. So when people look at this chart, they might think, oh, wow, Apple was just, a straight run-up. I wish I would have bought at below $1. Yeah, so do I, except it would have been $22. So let's look at 2001, 2002, 23, 28 cents, 40 cents, 43 cents. Wouldn't you have loved to have purchased Apple 2002 at 42 cents a share? And then it went down 32 cents. That might have freaked you out. 27 cents, 26 cents, 25, up to 33. If you're looking at this, you probably are thinking right now, I would have loved to purchase at any of those prices, because right now it's at 177. And I would have, I just increased my personal wealth greatly. So there were a lot of ebbs and flows during these years that look just like a straight line up. And then you start to see more of the ebbs and flows, and then it gets choppier, and then it gets choppier, until you might want to lose your lunch on some of these very choppy days up here. However, these days up here used to exist back here, and used to exist back in this time as well. So, long story short, Apple announced a multi-billion-dollar deal with Broadcom. It reminded me of the iPod news. It struck a chord. It was lightning striking, and it, in my opinion, makes a play for Broadcom being, not to say it wasn't already, but it gives a lot of momentum behind Broadcom to be a very good growth stock. Not to say there's genuinely a growth stock, because it is currently, just shy of 20 on forward PE. It currently has a nice healthy dividend yield, but most growth companies have very high price to earnings ratio. So what made me think, both back then with the iPod coming out and this right here coming out, I'll tell you what it was. Common Stocks and Uncommon Profits by Philip A. Fischer. If you've never read this book, if you've never heard of this book, I highly recommend you going out and buying this. I will never highly recommend you purchase any security stock company here on my channel. I'm never going to do that. I'm not an investment advisor. However, I would highly recommend any and everyone to read Common Stocks and Uncommon Profits if they haven't already. It's a phenomenal book. It will hopefully teach you the same thing that it taught me, which is how to find and discover. Sometimes you're not even trying to find and discover it, but how to locate growth stocks. For me, I remember Apple, that news back in the day, this one right here from last week, and I also remember when Starbucks first opened up in my neighborhood. It was right in front of a bus stop. 3 vehicles would be parked in the bus stop. 2 vehicles would be double parked in front of the bus stop, blocking those 3 vehicles in. And the police would come by and give all 5 vehicles a ticket. They would all happily walk out of Starbucks with tickets for $115 and a $5 coffee, and they would go about their day. And what would happen 5 minutes later? 5 more cars would be there. And this happened repeatedly every morning, throughout the morning. And I was like, there's something about that coffee. So Philip A. Fisher's book, Common Stocks and Uncommon Profits, made me buy, it didn't make me, but it taught me lessons on what to look for. And that's why I bought Starbucks and made some nice money on Starbucks. So let's get back to Broadcom. Broadcom made that news with Apple. I personally sleep during the day because I work nights. So I woke up to this news, and it was, in my opinion, earth-shattering news. And so I changed my mind from what I had all intentions of doing in May, which was to buy a defense contractor, most likely Raytheon or Northrop. However, the news made me dip my toe early, in my opinion, into the Broadcom part of the world. I had intentions of adding Broadcom as a position into this portfolio later on this year. However, this news was too much. Had I bought it the day before, I would have bought it much less. However, I got here at just shy of 680. It's trading right now at about 863, up about 27%. Remember Apple? All this straight run up? No, it's not a straight run up. Every day it's different. 39 cents, 48 cents, 68 cents. Let's go backwards where it goes, choppy. 16 cents going forward to 13 cents. There's ups and downs here. This is big chunks of money right here, or big percentages of money. Yet all of this right in here is extra sweet spot. Anyone who bought in here, even in here, extra sweet spot. Look at that, 41 cents. Geez, I wish I bought Apple back in the day. Any which way, Broadcom, I expanded just to the one share just to start the position in my portfolio. Broadcom currently price earnings forward of 19.68 with a 2.25% roughly yield. And dude, it's a dividend payer. Let's go. I'm not going to ever pay for Seeking Alpha. I don't recommend paying for Seeking Alpha either. So Got 11 years of dividend growth, and look at this. Look at this. This is just phenomenal. Let's go to the actual dollar amount. $4.60 a share every quarter. Last year it was at $4.10. 2 years ago, $4.60. That's a 50-cent gain right there. So let's just go back 5 years. $1.75. And what is it now? $4.60. Incredible. I'm not about to say it's going to continue like that. Hopefully it will. Hopefully it'll do even better. But this is just one company, Apple, announcing billions and billions that is going to pay Broadcom for chips. So hopefully Broadcom will continue to do just as well. I look forward to filling out later this year and adding more shares of Broadcom to this. So that was my one purchase for this last month, or this last week rather. Let's go over to the dividend log. I got 2 dividend payments, both from the same company. So Starbucks, let's look at Starbucks right here. Paid me $3.72 in my taxable brokerage account. This $3.72 was automatically reinvested as part of the DRIP program within my taxable brokerage account. And so I just got a small fraction of the share more. And in my Roth IRA, I got $13.51, which this too from Starbucks was just dividend reinvested automatically back into my Starbucks position. So I got a little bit more in my Roth IRA to start, and I got a little bit more of a percentage of a share with that. So I look forward to seeing what Broadcom does. Let me go back to, where is it in my brokerage? All those back and forths. So, dude, I could have woken up that day and seen that it was at, say, 650, and then the next morning it could have been at 750. I still, in my opinion, would have bought it, simply because I always kick myself for not buying Apple and instead buying Palm Pilot and losing lots of money in Palm Pilot. And that's also a reason why I own both Lowe's and Home Depot. There's no reason to own one of the same types of company. Back in the day, 20 plus years ago, Apple and Palm, they were both in the market of technology you could fit in your pocket. Had I just split my money between Palm and Apple, I would not be I would be in a different position in life. That's all I'm going to say. I would be in a vastly different position. So, what did you guys buy this week? Did you get it in on Broadcom? What are your thoughts on Broadcom? If you're new to the channel, if you like what you hear, would like to follow me on my journey, click like and subscribe. It would greatly help us with the YouTube algorithm. And with that, I will see you guys in a few days, because I will go over my month of May dividends received in a few days. So end of May is coming, and I will do a catch-up video to see how much I made across the 2 accounts in the month of May. With that, happy investing, everybody. Later.